When you first start trading, charts can feel like chaos, endless lines, candles, and patterns that seem to appear and disappear without meaning. But as time goes by, you begin to see that the market isn't random. It's a living, breathing organism, and chart patterns are its language. Today, in tip number 11, we'll talk about how to read that language, how to recognize chart patterns that reveal where the market might be heading next. These patterns aren't magic, but they are among the most powerful tools a trader can have. They allow you to anticipate reversals, confirm trends, and execute trades with precision. Before we dive in, let me say this: patterns don't predict the future, they help us read probabilities. As Paul Tudor Jones once said, the secret to being successful from a trading perspective is to have an indefatigable and an undying and unquenchable thirst for information and knowledge. Chart patterns are exactly that, a visual way of turning information into insight. Let's start with the basics. Chart patterns fall into two main categories: reversal patterns and continuation patterns. Reversal patterns tell us a trend may be ending and another might be starting. Continuation patterns, on the other hand, show that the market is just taking a breather before continuing in the same direction. One of the most iconic reversal patterns is the head and shoulders. You've probably seen it before: three peaks, the middle one higher than the others. It's a visual sign of exhaustion. The buyers push prices higher one last time, but they can't sustain it. Then, when price breaks the neckline, momentum shifts, and that's your signal. Let me give you a story to bring this to life. John, an experienced trader, had been watching the euro to US dollar pair closely. For weeks, the pair was trending higher, buyers in control. Then, he spotted it, a possible head and shoulders forming on the daily chart. The left shoulder formed at 1.2, the head peaked around 1.22, and the right shoulder came back to around 1.2. The neckline, that crucial support, sat at 1.18. John didn't jump in immediately. He waited, patiently, for confirmation, for that neckline to break. When the price finally slipped below 1.175, he went short. His stop? Just above the right shoulder, around 1.21. His target? Calculated from the height of the pattern, roughly 400 pips below, around 1.14, and here's the kicker: the market played out exactly as the pattern suggested. Euro to US dollar dropped steadily until it hit his target. Not every head and shoulders works out that cleanly, no pattern does. But what made this trade successful was John's discipline and his willingness to wait for the confirmation. That's the part most new traders miss. There's also the inverse head and shoulders, which is just the mirror image, signaling a potential reversal from a downtrend to an uptrend. Then we have double tops and double bottoms, another classic. The double top looks like the market trying twice to break a ceiling but failing both times. That failure often signals a bearish reversal. Meanwhile, the double bottom shows the market testing the floor twice and bouncing higher, suggesting a bullish reversal. And then there are triangles, perhaps my favorite continuation pattern. They form when the market consolidates, creating converging trend lines that squeeze price tighter and tighter until, boom, a breakout. Ascending triangles often lead to bullish breakouts, descending triangles to bearish ones, and symmetrical triangles. Well, they can go either way. The trick is not to guess but to wait for the breakout and then confirm it with volume or price action. I'll tell you something from my own trading experience: learning to recognize chart patterns completely changed how I view the market. I stopped chasing trades and started listening to the market. You begin to see structure where others see noise. When you master these patterns, the market stops feeling like a storm and starts to feel like a rhythm you can actually dance to. But there's one more truth: the real mastery isn't in spotting patterns, it's in how you act on them. Many traders identify patterns correctly but still lose money because they lack a plan. That's where risk management and patience come in. You must wait for confirmation, set your stops wisely, and never assume a pattern will guarantee a profit. As the great Jesse Livermore once said, the big money is not in the buying or the selling, but in the waiting. Chart patterns teach you just that, the art of waiting for the market to reveal its hand. Now, let's circle back to our case study. John's head and shoulders trade worked out beautifully, but the real lesson wasn't the profit, it was the process. He identified the pattern, confirmed it, defined his risk, and executed without emotion. That's trading discipline in action. If you take one thing from this episode, let it be this: chart patterns are not about prediction, they're about preparation. They give you structure, confidence, and a framework to make smarter decisions. And now, I'll leave you with a question: what's your favorite chart pattern to trade, and why? Do you trust the classics like the head and shoulders, or do you prefer triangles and wedges for spotting breakouts? Drop your thoughts in the comments below. I'd love to hear how you use patterns in your trading strategy. Until next time, stay sharp, stay patient, and keep your charts clean.
Thank you for listening to the 101 Trading Tips in the Ultimate Trading Podcast, brought to you by bellsforex.com AudioWorks. We hope this episode gave you insights, perspective, and practical ideas to strengthen your trading mindset and improve your decision-making. Stay disciplined, keep learning, and remember, every trade is a step toward building your edge. If you found value in today's episode, don't forget to like, subscribe, and turn on notifications. Sharing the podcast with fellow traders helps us grow and bring even more free trading education to the community. Visit us anytime at bellsforex.com for resources, guides, and tools to support your trading journey. Until next time, trade smart, stay disciplined, and keep building your edge. Happy trading!